Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist. Taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
Hi, everyone. Welcome to episode 51 of Carson's Facts versus Feelings with Ryan and Sonu. Sonu, it's not just Ryan and Sonu this week. We've got some special guests, and we're really excited. We're calling this week, the 51st episode, Talking with Carson, with the Carson Investment Research Team. Can't even read my own writing there. Sorry, I added the word "the" right at the last minute. How excited are you, Sonu? We've got a full house today.
This is exciting. So it's less talking from us, I guess. So it's just. Yeah. That may not be a bad thing, but no, this is very exciting to have team members on.
Well, we mentioned last week, so we've obviously done, this is our 51st, and we've hit 25,000 downloads. So we pay attention to that pretty closely. We're in the top 10% of all podcasts ever to have that many downloads, which is really cool. Obviously, we're shooting for, top 1% at this point. So we'll see how the downloads go. If people like having everyone on here, they like the fact you and I don't talk as much, Sonu. So let's just get to it. We are joined by some relatively new members to the Carson Investment Research Team. We have Barry Gilbert and Grant Engelbart joining us. So let's kind of start maybe with Barry, just because, Barry, I see you first on my screen. Right. How excited are you to be on the team, and give us a brief history of the life in Barry Gilbert?
I am so excited. I used to read a book to my daughter where you say, "I love you to the moon and back," and I'm excited to the moon and back. It's just, it's really great to be here. Incredible team. You only see a few of us here on the call, a bunch of us also working on the team, and I've just been so impressed with everything that I've seen. History, how far back you want me to go?
You have something on your shirt.
Let's start with the shirt.
Right?
So
on YouTube, on the YouTube channel, everybody hold their shirts up. See if you can see us on YouTube. All of us are wearing a special shirt today for the YouTube channel.
Yeah, we're wearing our college colors, except for Sonu. You have a special shirt there.
This is my own college color, which is basically the University of the Federal Reserve's economic data. Fred.
Now we got Ohio State over there with Ryan. I think folks have heard of that school. Nebraska, I think some people might have heard of that school as well. Harvard College, maybe not. Small liberal arts college outside of Philadelphia. No football team. Don't necessarily consider that a strength of the school. So just a small place out there. But Ohio State, Nebraska, what great schools. And the Fed, well, everyone has an opinion on the Fed.
Now, Barry, you're not starting this off very well. I'm about to just cut you off. I'm not Ohio State. This is Xavier. Fear the Blue Blob. See, I graduated from Xavier University in Cincinnati, Southwestern Ohio. I am a Ohio State fan. Don't get me wrong. I thought about going there.
Still a Buckeye.
I'm still Buckeye at heart. But no, I'm actually wearing my Fear the Blue Blob, my Sweet 16 Xavier basketball team last year. So, yeah, so definitely that's probably some Ohio State stuff in my house, believe me. But I am wearing my Xavier today. So, Grant, you're wearing –
two of us.
Yep. Yeah, that's right. That's right. Grant, you're wearing Nebraska. Welcome to the team, Grant. Tell us a little about yourself. And are you a huge Cornhusker fan? And are they ever going to win a game less than 7 points? Because every time they lose by a touchdown, it's fascinating. It's statistically impossible, but they keep doing it.
Well, you're gonna get me fired up right off the bat here. But I am equally as excited to join the team. We're now 2 months in. Barry and I started the same day, and echo all of his comments. Just been fantastic. I'm here representing the home office, born and raised in Omaha, went to University of Nebraska. Ron Carson has a big relationship with the University of Nebraska. That's been a great kind of connection there as well. And have worked in the industry here in Omaha, for the past 15 years. And it was time to come over to Carson. It's been a great environment. I've had a lot of friends here that I've known previously. So it's been a great transition, and I'm really excited to be part of this team. We have so many strengths that we'll explore today on this podcast, and excited to see what the next steps are for Carson.
Can I ask a question, Grant? What is a corn husker? I mean, is it
Oh man.
literally?
It's a
What
great.
is it?
It used to be the bug eaters, so we've come
Ooh.
a long ways.
Oh,
But it literally is a person who husks corn.
okay, okay. So
It's
it's very
very
literal.
self-explanatory. It
Okay,
is.
yes.
Yeah, there's nothing. There's no other meaning besides just someone that husks corn. Gets it ready
Interesting.
to be eaten. So
It's fascinating. But yeah, I went to Purdue, and for us, it's a Boilermakers, right?
Mm-hmm.
Which is the folks who tend the boilers,
right
from back in the day.
Well, and for those of us in college, Boilermaker means something different, right? It's a particular drink that you can do. That's when I hear Boilermaker. But let's kind of start. You know what, guys? Sonu and I are gonna do a little macro roundup just for a couple minutes for the regular listeners, and we're gonna dive more into the team here, like we want to do. I mean, Sonu, let's be honest. This week, some of the big news is U.S. and China. China's putting the clamps on iPhones. Now they're doing iPods, which everybody loses their iPods anyway. So I think that's partially happening anyway. And there was one other thing. What's the other one? There are three things that they're putting clamps on. Bottom line, though, almost 20% of Apple's revenue the last 5 years has come from iPhones. How big a deal is this? Because Apple, by the way, lost $190 billion the 2 days in the middle of last week. That's a pretty big hit to a market cap. It's still well over $2 trillion. Let's be very clear. But 6.5% drop in 2 days. How worried should we be about U.S. and China here?
I mean, I think there's a more macro question, how worried about US and China we should be. And that's the Apple question, right? There's a more micro company-wise question. But just getting to the Apple point, look, Apple's up, it was up about 51% year to date by the end of July. There's a bit of a pullback over the last month. It's still up 37%. So let's keep that in a little perspective, right? I mean, with the drop. Yes. And Apple, look, China was the fastest growing segment was the fastest growing segment for China, for iPhones, right? So it is, it's a big deal. China's a big deal. But look, what the Chinese government came out and said is that, okay, if you're a federal central government employee, you cannot bring your iPhones to work. You cannot use your iPhones to work, right? Now, I can't imagine a lot of people are doing that anyway, right? And even if you look at the Chinese economy, about 70% of Chinese workers are employed on the private sector side of things, right? They're not all central government or even state government. So they're going to continue, I think, buying iPhones. It's still seen as a luxury product, which it kind of probably is, even in the States for that matter. Right. But yeah, especially in Asia, China, it's seen as a luxury product. As incomes grow in China, I think, they'll still continue to sell iPhones. So from that perspective, I don't think it's a big deal. I think like in China, like everything in China, it's probably a little more of politics as well. The big competitor to Apple in China is Huawei, right? And they want to promote Huawei. The U.S. put massive sanctions on Huawei a few years ago, saying you cannot buy chips from U.S. companies like Qualcomm and things like that. Qualcomm needs permission from the U.S. government to sell chips to Huawei. Right. And the U.S. government said, they're probably not going to give you that. So that set them back almost a decade. But recently they said, you know what, our latest phone is going to have some advanced chips in it. And that was a big deal. The Chinese government probably wanted to make it a bigger deal than it was. And hence all the news about, don't use iPhones, go buy Huawei.
I'll have to admit, the first time I heard Huawei in the news was a couple of years ago, and I had no idea that's how you pronounce it. Just go look at that and tell me that's how you pronounce it. That doesn't make much sense to me. Anyway,
I don't know if I got it right.
Yeah. That's close. You guys know what we're trying to say here. It's close enough for government work, no pun intended. Barry, as a portfolio manager, you've managed portfolios not most of your life. You actually had an interesting first half of your life, but lately you've been doing portfolios for the last 10 years or so. How impactful is one company? I mean, Apple's a big company. Let's be clear. I think it's actually, my notes say 2.8 trillion, still up 35% for the year. How impactful is that from a portfolio construction point of view?
They're really not all that impactful. Especially if you're thinking top down. Apple is just one company. It's a big company, but it is just one company. How does this news compare to all the news that we've had, say, around AI? What's more important? What's going to push the markets more? So, it's not meaningless. It is meaningful, but there is some political symbolism here as well. And we shouldn't get ahead of ourselves on what this actually means. It is just government workers. It is just them taking them to the office. And unless they have a better product, that's not what people are going to buy unless they actually start mandating the phone that they buy, but we are a long, long way from that.
Yeah, good point. It was actually watches. Remember, I said there were three things. It was watches, iPhones, and ear pods were the three things now that they're probably clamping down on. Barry, in a minute or two, what was the first part of your career? Because you weren't always a finance guy, right?
I have a PhD in philosophy. I don't think there are all that many of those in the industry. There is another PhD in philosophy here at Carson. Great person, had a chance to speak with her for a bit. So not the only one, but bit of a career path switch.
Yeah, no doubt. And Barry and I, we did work for several years together in a past life. So really excited you're here. Grant, I want to pull you into the conversation. Is it true you know every single ETF in the universe? Because it seems like you're an automatic robot when it comes to you can husk corn and you know ETFs, right?
Maybe you should ask how many don't have Apple in them.
Oh, there you go.
Yeah. It's a very niche knowledge base, and it's not too fun outside the walls of finance. But when ETFs were a little more in their infancy, I definitely pride myself in knowing just about everything I could about every one of those ETFs. As they've expanded and grown and exploded over the recent years, it's becoming harder to keep up. But I do really enjoy the industry and the product, and think that the chassis of an ETF makes so much sense going forward, and we're going to continue to see expansive growth in the years ahead.
So building on that, right? We have over 350 Carson Partners. We've all seen the stats, flows into ETFs, potentially out of mutual funds as well. I mean, is that explosive growth going to stay in ETFs, you think, specifically with financial advisors, or where's that path going, you think?
I definitely think so. You're seeing, the movement, the evolution of ETFs change a bit from index passive, that's a bit saturated, into active managers coming into the space. And the more active managers come into the space, then you bring these relationships with traditional mutual funds that advisors have used for decades and have relationships with into the fold. And so we're seeing about 6% of the ETF market today is active, and that's growing quickly, but there's still, obviously, at 6%, there's a huge runway for active ETFs to continue to grow. I think that's a huge growth potential. There's a number of different structured products are being replaced with ETFs. There's a number of different ways that ETFs are kind of going after the marketplace and providing tools for advisors to use, for us as portfolio managers to use. And so I definitely think that trend can continue, if not accelerate, as things become easier to move from the open-end traditional mutual fund structure to the ETF structure.
No, well, that's great. I mean, obviously, the last couple of questions, you guys get a little feel for our team, where Barry brings so much expertise with models and portfolios and managing money, along with other things. And Grant brings a lot of expertise with ETFs and some of the similar things I just talked about, knowing so many people in the industry. So, Sonu, can I rant for a second? Is that okay?
Go ahead.
Go ahead. I do this on this podcast. So,
I'm trying to guess.
You don't see this one
coming. I probably won't guess what it is. But
so my daughter, when I pick her up from school, she's like, "Hey, let's go to Starbucks." Now I'm not a big Starbucks fan, whatever. So I'm like, "Yeah, give me a hot chocolate." Sure. Well, I don't drink coffee. I think I've talked about that on the show before. I don't really do caffeine that often, but I like a hot chocolate once in a while. So I got her hot chocolate yesterday. She goes in Starbucks, brings it back. By the time she brings it back, all the whipped cream is melted. We can put a man on the moon. We can construct portfolios of models for billions of dollars. But why can't we have whipped cream that doesn't melt immediately in hot chocolate? I don't know if there's an answer. Anyone on this panel have an answer to that? I don't know. It frustrates me.
Maybe it's telling you that you don't get the whipped cream, right?
Don't say that. No. I want the whipped cream. And that'd be the worst thing. Say it melts in there so the calories technically still count. And believe me, I have no idea if this is true. But you don't even get to taste it. I mean, that's the worst of both things, right? You get the calories, you don't even get to taste the creamy goodness of whipped cream. All right, well, nonetheless.
One thing on Starbucks, that point, one thing, I like Dunkin' Donuts as well, so which is the one close to me, and I like the cold brew. But for a hot cup of coffee, I like Starbucks. I get a latte. It's not just the black coffee or anything like that. I get a latte or whatever, any of these fancy drinks, chai or something. I feel like Starbucks has figured out how to keep it hot in the cup without scalding your hands. Most of the coffee shops I go to, it's an amazing experience if I sit and have coffee there. But if I take it to go, by the time I get to the car or by the time I walk home, 5 minutes later, it's cold. I feel like Starbucks has somehow perfected how to keep that, drink hot enough in your hands for a good period of time.
Yeah,
I don't know if you guys have notice that. But
I would say right about now, Barry and Grant are saying, "What do we get ourselves into?" I thought we were going to talk about, welcome to the Facts versus Feelings podcast.
I find this conversation really interesting. Ryan, next time I get a chance, I'm going to send you a cooler and some of those little ice packs and a bunch of whipped cream.
Okay.
And,
that's the answer.
Just put your own whipped cream on in the cup.
That's true.
Ryan, if you go to Starbucks with your dog, you can get a pup cup, which is a small cup of whipped cream. So you could get a sidecar pup cup and use that to top off your hot chocolate.
Are you saying I should take my dog's food? Is that what you're telling me? I don't know. Yeah, okay, now. So Sonu, let's bring it back on task here. So we have a investment research team with more than what is it, 15, 16 people approximately. We've all been on teams before, research teams. I mean, it's hard. I'll be very honest. It's hard to get everyone's views, get everyone's voice involved. When you have too many cooks in the kitchen, you are you pretty much the leader, right, of kind of our models and our portfolios, and we all chime in. But I look to think of you as the head of that part. I'm kind of the head of communications, and you're the head of the managing the money, right? How do you do that? How do you construct an investment research team where everyone's voice is heard, everyone can be happy, and at the end of the day, make our advisors happy and help their clients?
I think the biggest thing, I was thinking about this the other day.
Good, you should be. It's your job.
You have to be open, right? Like you have to be open to new stuff. You have to be open to the fact that you have new models, new data, new research coming in. You have to be open to the fact that new research could be better than what you've seen in the past, right? I mean, that's hence research. And then you have to be open to new people bringing on new ideas as well. At the end of the day, look, my background is in engineering, and we know how to get a plane off the ground. Ironically, that's easier to do in some ways. We still haven't figured markets out. There's no equation that tells you markets should do X or Y. You have to be open to, putting a lot of different puzzle pieces together and recognizing that you as one person or me as one person doesn't have all the answers. And then it sort of, falls into place. Like, you bring the technical side. Barry and Grant are looking at, from products and flows and valuations and margins and so many other things that, goodness, I just don't have the time to look at, right? So it's all about putting everything together and figuring out, like we're all playing probabilities here at the end of the day, right? Like there's no certainty, there's no 1 or 0. Then it's a matter of, what's the likelihood of X, Y, Z happening versus something not happening, right? And that's what we're trying to judge. And I think that's how I think about trying to understand what's the story of markets. At the end of the day, you need a story too. You can't just look at, you and I have talked about, the yield curve is inverted. Boom, we're going to have a recession. Why? Because we've seen it 10 times in the past. Hello, 10 times is not a big sample, right? I mean, and then PMIs are negative, below 50. Well, let's follow that, right? Or, M2 is slowing, so maybe you'll have a recession. No. You need a story of the economy, and how does the story come together? You take in different ideas, you say, okay, this is what the economy is doing. This is what markets may do probabilistically. And that's how I think about it, if that makes sense.
No, that makes a lot of sense. I mean, obviously the story part's a big part, I think. I mean, you can create some research and hopefully it's great research, but if it's not easy to understand, not easy to consume, it doesn't make sense to the end person. I'm not saying we always have a story for everything, but I think if you listen to this podcast after 51 of these, you kind of see that. Now, Barry, I want to bring you in here for a second, if I could. How, when you look at portfolios, there's a lot of different parts to it, right? There's alts, there's bonds, there's stocks, there's cash, maybe even some more things I'm not even talking about there. How do you think they all work together? And how do you construct that in your head when you are working on billions of dollars worth of money when you're trying to construct that?
Yeah, that's a great question, because I think so often this industry...
Well, thank you. You actually sent it to me, so yes, thank you. Yeah.
People look at the pieces and they don't see how they all fit together. And if you look at how they all fit together, and you can find good diversification, not diversification, right, which sometimes happens too. You actually have to be getting the benefit when it comes to how a portfolio behaves. That's free. And that's something that we look for. It's elusive. It's sometimes as hard to get as actually forecasting the economy, but being really good at seeing the big picture and really seeing how all the pieces get put together and not just thinking about the pieces all by themselves, I think makes a big difference. And I think that's part of the DNA of this team. Fairly new team, new people coming in, but everyone who I talk to on this team, I talk to Grant, Sonu, I talk to you, I think everybody sees that bigger picture. And that's, I think that's really unusual in the industry.
No question there. You haven't talked to me as much lately because, again, by the time people listen to this, all four of us will be in Nashville for Excel, our Excel conference, which we are so excited about. We're going to have over 1,000 different people there, a lot of financial advisors, people in the industry, and it's going to be an absolute blast. So I've been a little busy getting ready for that, but nonetheless, it should be a lot of fun. And you'll hear some live next couple of podcasts actually are going to come live from there. We'll record them and play them later. But yeah, Sonu and I talked last week a little bit about that, but we are excited. Cliff Asness, I think, is the one we're really excited about. That one should be really awesome. Now, Grant, I want to pull you. Yeah, that one we'll share live on social media. So follow us on social media. It's sometime Thursday afternoon. I honest to goodness don't know the exact time, but sometime Thursday. If you listen to this on Wednesday, the next day, be ready for a really fun discussion with Cliff coming from there. So, Grant, I want to pull you in for a second here. We've talked about models, portfolios, ETFs. We do a lot of things from our investor research team, but at the end of the day, our job is to help our partners. Now, those are our advisors. We use the lingo partners here at Carson, which is to help our partners. I know you've already, your first couple months, you've found some different ways to help our partners. And also, let's not mention any partners by specific names. Let me be clear on that. Maybe we can, later, but not in this podcast. But how have you helped some existing partners? And also, at the end of the day, we're also, we're recruiting, right? We're growing like mad here. So we're trying to help recruit. How are some ways you're trying to help the infrastructure to help new partners that join up in the future? What are some things you've done lately?
Sure. Yeah. Great question. There's a lot of things that we've done already to help, and that this whole team has done and will continue to do. Some examples are just understanding the ETFs on the platform. That's kind of first and foremost something I'm looking at. Informing advisors. We have those managers talk to our advisors, but then going the next step and telling advisors how to use them, put a portfolio together, building those model portfolios, not at the individual model level, but also the household level. I know Barry and Sonu have looked at that a lot, trying to create new portfolios for advisors to put together, to know how all those pieces work together and relate, from an income standpoint, which I think makes a ton of sense. And we could dive into that a lot more. Other parts of the organization, though, are also, something I've been really impressed with, the financial planning part of the organization, the in-house wealth management portion that extends to all of our partners, and working with, high net worth individuals all the way down to, an individual 401k participant. We've looked at replacing funds in 401k plans, all the way up to dealing with, deconstructing the alternatives portfolio in an ultra high net worth prospect, right? Barry and I have worked with a number of partners on that. So it's wide ranging. Obviously, communication, is an ongoing thing we'll continue to do, but just those other kind of one-on-one, high touch, ways we can help partners and advisors and new advisors come onto the platform, and understand everything they're invested in and what their clients are doing and find the best way to do it, I think is hugely important.
No, absolutely. I mean, I've worked with advisors the last 7 or 8 years, and believe me, I know when you start somewhere new, you come over to a new place, you're drinking out of the fire hose. It's never easy. I don't care where you're going; it's never easy. But I think some of the amazing work that our team has done from the research point of view, but the company in general, to make it easier for someone really not to, just to come on in and just get back to servicing your clients. Now, Sonu, I want to bring you in for a second because Grant said something that struck my attention. You're the senior person on the team, at least on this podcast. He mentioned, research is over here, financial planning's over here. We're working more together with them. Can you talk briefly? It is what it is. It wasn't always that way, right? But I think we've talked before. Burt White, he's hired by most of us on this podcast. The idea that we're combining those two because it makes total sense, but it is what it is. Maybe we didn't do it. You want to talk about that evolution?
Yeah, I think very often investment is in a silo by itself. Like, I'm making investments. And then wealth management is thought of, that's financial planning, right? Mm-hmm. And the two are very separated. But actually, advisors do this every day. They're trying to figure out, a client comes in and says, I want to retire at the age of 65 or 70, and I want to, buy a boat, and I want to fund my kids' education. We want to buy a second house. I want to take a few more trips. Okay. All these are, in a sense, these are all goals, but they're also liabilities, right? Like at the age of 65, right now I'm 45. At the age of 65, I need X amount of money to go buy a sailboat. At the age of 70, I need X amount of dollars to go buy a second home or take a few more trips or, take a big family vacation with everyone, grandkids and all of that, right? So how do you meet those liabilities? You need assets. You need assets to grow and match those things. And you can't just put it in cash and say, okay, I'm just going to already have all the money because, and that's going to fund all these different things I want. No, it doesn't work that way, because why? We have inflation at the, so then you get into, okay, how do I invest that money to meet my liabilities in the future? And investments obviously plays a big role in that. And that's where I feel like we come in. We work with advisors in the financial planning side of things. And that's where we are trying to, combine all of everything we do each and every day. That's what we're trying. We're trying to help advisors, help you all. I mean, I know a lot of clients listen to this, right?
Exactly.
All of you have goals in mind. And when we work with our advisors in particular, know that we have a big input behind the scenes in a way to help them achieve those goals through investing, all the assets you have so that it's available for you in the future.
Yeah, I mean, I've worked at small shops. I've worked at really, really big shops. And I think Carson is kind of in that sweet spot where, we can have impact. We can work with other teams. It's easy to get a hold of someone who's in charge of this other department. You just send them a message on Teams and they're going to reply to you, right? Some big companies, believe me, you're like, oh, they don't work here anymore? No, they left 6 months ago. Oh, they left 6 months ago? Trust me, that happens a lot more than you think is all I'm going to say. So we're really impactful. And I think it's just so important for advisors that are partners that are here, but advisors that are listening that are saying, I'm not too warm and fuzzy where I am, but I don't really want to leave. We're doing everything we can to make it easier for advisors to come on over and be part of this revolution that we have at Carson. Now, Barry, I want to bring you in. Go ahead.
Actually, a quick question for you, actually, on that, right? Because you can have the plan, you can have the investments, but clients follow, Mark, you see the headlines, you see everything about, China this week,
right.
Or last week, it's oil prices and Fed and inflation. Nobody knows what to make of all of that, right? So, and you obviously meet our advisors all the time, and you meet clients too, right? I'm wondering, how do you communicate with clients? And especially right now, you see the economy is doing well, but every consumer sentiment survey out there seemed like everyone's really depressed, right? Yeah. Everyone's really negative on things. So, like, what's going on? What are you hearing when you talk to clients, especially?
Well, I'll start with this. They must not be Bengal fans because we just signed Joe Burrow to a long contract. So our our confidence is a little higher. But you're right. I mean, yes, believe me, as a market strategist, I talk about what's in the news. We all do that. But I love to point out the bigger picture things, right? Hey, most years have about 3.5 times a year, you see about a 5% correction. Most years see a 10% correction. Since 1896, the Dow has had 2 world wars, 2 100-year pandemics, lots of inflation, deflation, assassinations, lots of bad stuff. But you know what it also had? It's gone back to new highs every single time. We didn't think this time's going to be different. So I like to take those big picture views to kind of help calm some nerves, because we do it. On this podcast, we come up with sometimes bombastic things to talk about, or an extreme title for a blog, because, hey, we're trying to get views and clicks like everybody else. But again, I think taking that big picture view to help comfort, and again, what I've made a career literally for 2 decades is looking at history, looking at the past, showing where we've been. We've had bad times before, guys. Well, full disclosure, I can't make a guarantee, but on likelihood, we're going to have another bear market. Maybe let's have another couple in the lifetime of everybody listening to this. It's going to happen again. But again, we're going to get through it, I think, are the real important things to note. So that's kind of what I like to do. But Barry, I want to bring you in for a second. I was woken up this morning to my 15-year-old daughter and wife screaming at each other. You have a daughter, ballpark that age. Have you ever been woken up like that? I don't even know what they're arguing about. Honest to goodness, I was in the middle of it. They both are telling me what the other did wrong. They don't listen to this podcast, so I can talk about them. One of these days, they'll know I'm talking about them and actually listen. But have you ever woken up? Well, your daughter's 17. I'm sure she's an angel, right? You've never had that problem?
Look, that's just part of family love language, right? It's we fight with each other because we love each other, we care about each other, and because we can, without worrying about it, doing real damage to the relationship. So, yeah, it happens sometimes, but it happens for all the right reasons, I think.
And I don't know if this is good or bad, but my 10-year-old Gus, he's almost 11, by the way. His birthday's on Talk Like a Pirate Day, which is September 19th. Gus is like just sleeping. They're just yelling at each other. He's just sleeping through us. I don't know. Maybe he's seen it once or twice. Or he's heard. All right. Nonetheless, Barry, let's get on task here. What was I wanted to ask you something. Oh, here we go, Barry. So you've been here for about 2 months, give or take. We have something called the Carson House Views. And honestly, if people listen to this podcast, Sonu and I talk about our house views quite often. But how exactly in your world of working at a couple different financial institutions over the decade or so you've been in the financial services industry, how do we do things at Carson a little bit differently, and how can we help our advisors and eventually help their clients with how we view the world when it comes to macro views and portfolios?
Yeah, I'm going to build on what Sonu said before. You need to have a process where the arguments that everybody's making, the data that everybody's looking
There's
at.
that word again, arguments. I noticed I said it. Yeah, there you go. Yeah.
It's like you started the day with that.
Exactly.
Yeah.
You got to make sure it doesn't get averaged down to the market. So I've been on teams that are very big. You get 10, 11, 12, 13 people, and you take votes on what people think. And if all you're doing is voting on what a lot of people think, you're going to get something like the market. It's not going to be differentiated. I think in the team here, it's a big enough team. You called it the sweet spot, Ryan, where we can get all the arguments out there and really look at them and not average them down, but try to figure out what the best argument actually is. And that's what goes into our house use. And we have a process. We have a way of doing that step by step to make sure that it doesn't get watered down. So it's not just a bunch of people in a room having a conversation. There are different pieces that we look at. There are specific parts that we analyze. If we do think that it's getting averaged down, we talk about it. Now, sometimes you want to be close to the market, but you got to have an opinion. Carson had a big one. I can't take any credit for this. This was before I joined. Carson had a big one going into the year. Everybody was saying that there was going to be a recession. Odds were extremely high. Carson differentiated, said no. And I think that in part came out of how the process actually worked. And then, of course, you can't just have a process. You have to have the right people following through in that process as well.
Well, yes. Definitely. I think having a smaller team, you can make those kind of out of consensus calls if you're going to back them up for the right reasons. We're almost at the end, guys. Just a couple more. Grant, I want to bring you in probably your final question here. We all have different investment philosophies, kind of how we see the world, which is good. We don't all want to agree. We do look at things differently to a degree. Can you tell us a little bit about your investment philosophy and kind of has it changed over your career at all?
Sure. Thank you. I think it kind of goes to what Barry said about having different views on the team and not avoiding that groupthink. We all look at the world a little differently. Sonu from an economic lens, Ryan, you from a technical perspective. I look at valuation. So born and raised in Omaha, Warren Buffett, kind of growing up, I had that Graham and Dodd kind of approach to Buffett, Graham approach to investing and deep value investing. That has changed as I got more into the industry and kind of realized that, yes, me personally, I could sit on a value stock for 5 years or 10 years until it came to fruition, but clients can't do that. It's difficult to do that when they're looking at the S&P every day on the screen or whatever they're looking at. So I started to get introduced to the world of factor investing, in particular pairing value and momentum. And I know that's something that Meb Faber talks about, AQR talks about, a lot of people do, Alpha Architect. And so that really appealed to me because it makes it's hard for me to say a stock is cheap and it's trending the right direction. How is that not an own? Like you should buy that. And so you can apply that kind of methodology to asset classes. You can do it in a variety of different ways from a top down to bottoms up perspective. And so I've kind of grown to that appeal where you keep that value anchor, but also need to pay attention to what's happening in the market today and what the market signals are telling you, similar to what, Ryan, you've done for decades.
Yeah, the good stuff there. I mean, I think, Sonu, maybe we'll just kind of bring this full circle. Thank you to Barry and Grant. Obviously, I think people get to see why this team's so much fun to work with and why what Carson is doing, we're hiring literally, I think, are the very best people in the industry. Believe me, I've got a lot of people saying, hey, I want to work with you. Literally every day, I've got somebody saying, what you guys are doing is cool. What you guys are doing is different. Are you hiring? And so, well, let me know. I'll let you know. Anyway, but it is really, really exciting. And we're seeing it. We're seeing the evolution. We're seeing the path.
By the way.
Yeah, go ahead.
Quick thing on picking up what Barry said, people getting together in a room. Have 4 of us been in a room together? Live, I mean? I'm trying to think.
We have the room I'm in right now. Actually.
Oh, yes. Okay.
Their first week.
The first week. That's yes. Since then, we haven't been in a room together, but I'm looking forward to all of us doing that in some form next week.
Oh yeah, we'll be in a few rooms together next week, I'm sure. So that'll be fun at Excel. So Sonu, let's kind of wrap it up with a little, facts versus feelings, episode 51 talk here. More macro stuff. The dollar's been in the news. Crude oil was just up 9 days in a row. You already talked about kind of China. We've had a lot of questions, but what's your take going on in the energy markets and with the dollar? I know you wanted to touch on some of that here before we sign off on episode 51.
Yeah, historically, when the dollar is positive, or when commodities are doing well, you think, oh, the dollar is down, right? What we've seen recently is exactly the opposite. Both have gone up quite a bit. And like, wait, why is that, right? It's almost like it's disconnected. Ironically, this is not why the dollar is up, but it almost looks like for commodity producers, right? When the commodity prices go up, the currency does well because they earn more money. And it kind of is a good reminder that the US is the largest producer of oil right now. We are producing more barrels per day than we did back in 2019, which was the previous peak. We produce about a fifth of global oil production, right? That's massive. We used to import a ton of oil in the mid 2000s up until the early 2010s. We don't do that. We have our trade balance, so exports minus imports. That's positive for petroleum. That's a huge, massive change from, talk about relationships within the economy changing and not being stuck in prior models, right? This huge economic thing that has happened where the US is, I don't want to say it in this way, but yeah, maybe, it's a good way to think about it. Like the US is energy independent. Prices are set on a global market. So I don't want to take that, too far. But the US is, for a lot of practical purposes, energy independent, right? So it's a good reminder that the US dollar does not have to be negatively correlated with commodities anymore, right? Now, why is the US dollar going up? That's another reminder. Hey, the US economy is doing a lot better than economies of China, Europe, all of those, right? And when that's happening, what happens? The US dollar is going to go do better than other currencies, right? And I think that's your straightforward explanation.
Absolutely. I think, and last week on the podcast, we did talk about, we thought yields were going higher for the right reasons because the economy was strengthening as well. So one final comment from me on that. If you listen to this podcast for a while, we've been saying, hey, we like the cyclical names, specifically energy. Energy's probably been about our favorite group the last several months. Now people are catching on. Oh, crude oil is up over $80, up 9 days in a row. We've liked energy stocks for a while. We've been overweight those. We've talked about that on this podcast. So that's nice that that's coming to fruition. Oh, final thing, Sonu. I was in New York with that same daughter, that loving daughter I talked about, who woke me up this morning screaming and yelling at her mom about something about her brother.
At each other in a hotel room in New York City.
No, we get along. It's just the two of us. We get along probably because I let her do whatever she wanted. We went shopping in New York City all day, and we went to Taylor. So we talked about Taylor Swift so many times. Taylor Swift lives on used to live at 23 Cornelia Street. Okay, it's on the West Village. Of course, we had to go there. We got some pictures. Right in front of it, there were tons of people taking pictures in front. She don't even live there anymore. Let's be very clear. But apparently, there's some song where she mentioned it. So it's a Swiftie hangout, and yes, we did hang out there. And I, honest to God, I think I took 300 pictures of my daughter just real fast. I took so many because they had to be perfect. And anyway, I thought it was funny because there also was a sign that said no standing here, trying to get people to, and I stood under it and pointed at it because I'm standing. Anyway, breaking the law. But anyway, with all of that, everybody, thank you so much for listening. Thanks to Barry, Grant, and Sonu as always, and Chelsea, our producer, for helping us get this madness through the pipeline. This was episode 51, talking with the Carson Investment Research Team. The next couple will come to you from Excel in Nashville. They should be really, really good as well. But again, we've had a record number of downloads, tons of positive feedback on this podcast. We love doing it. And again, if you're an advisor that's out there, you're looking around, you say, you know what? Kind of like what they're doing over there. Check out carsongroup.com. We'd love to talk with you a little bit more if you want to come on over and have some fun with the Carson team. With all that, we'll see everybody next week. Take care. Goodbye.